in the world of commodities. A lot of interest building up there as well. Crude currently near that $81 per barrel mark. YTD, when you look at Brent crude prices, they're down 6% as well. From its peak, it's down 16.5%. Gold, lot happening on that front as well. To talk on all that, we're joined by Peter McGuire from CEO at XM Australia, joining you with us. Peter, thank you so much for joining in with us this afternoon. Very good evening to you, and thank you so much for joining in with us and giving us your time. Peter, let's just talk about the recent issues that came in, especially in terms of the fronts of the Red Sea issues. Because of that, there are lots of concerns that come in, especially there. So in terms of logistical costs, what do you think the impact could come in terms of any commodities front? Anything, do you see this persisting for a long period of time then on the commodity impact?
Well, good afternoon, Vinny, and season's greetings and all the best from Sydney. I think there's a number of different fronts that can escalate from here, and it just depends as far as involvement from the Houthis, what happens as far as Iran, and where do the states play in it. If they restrict trade, and this is all about the Suez and leading into the Red Sea, then ships have got to take, as you know, a very long route all the way around South Africa, and that's going to cause, one, increased shipping costs and naturally a delay in all goods. And secondly, of course, it's going to escalate crude prices. So this is the choke point that is going to be represented. And I think that it's going to be a very delicate week ahead leading up into New Year's Eve, how this whole situation is managed and whether we see a blowout as far as prices to the upside.
Well, thank you for that, Peter. This is Lisa joining in. But what is your view on the crude prices? It's down around 17% from the September peak that we saw in September. It was at around $97 per barrel. So you expect crude to remain range bound in the coming time?
Well, Lisa, I think that remembering that was a very, very escalated price due to war premium built into that through the attack from what happened in Israel. And so we've got that to consider. Then that war premium has since been stripped all the way out. And now you've got hostilities and geopolitical tensions again being created in that whole, from a price point. And there's already dollars being added onto that as far as a premium. So it's very difficult to say how high this could go, or the whole situation could be under control within, a matter of days, where it's fluid, it's dynamic, and I'm not suggesting you're going to go back to 97 anytime soon, but anything's possible with the crude oil market.
Absolutely, anything is possible with the crude oil market. But let's just talk about industrial metals, because they seems like they've lost their sheen. Nothing exciting happening there. Very subdued here in terms of the YTD performance. Specifically, when you look at it for zinc and lead, they've been falling around 13 to 14% YTD. What's the outlook on these industrial metals, Peter?
Well, you've got to be, conscious of it as far as what we've seen as a downdraft. And remembering, I think another way of looking at it, Vinny, all base metals were really stripped out as far as price when that heat came out of the oil market. So in turn, there was, downside pressure on a number of those particular other, base metals. And while copper has had a little bit of a rally, a lot of them are very, very pushed, depleted and well, not depleted so much, but very, very soft pricing. And where that's going to run at the moment, I think that I wouldn't be surprised that there's going to be good strategic buying from China leading into Lunar New Year. And this could be another reason as far as buying cheap and as far as their stockpiles are concerned.
Right, and Peter, just lastly, we cannot not talk about gold when we're talking about commodities, right? And that's continuing to inch a bit higher. That's something that everyone goes to. It's a safe haven commodity. Could you, help investors, that actually helps investors earn 8 to 10% as well in terms of returns? What's your view on gold pricing as well?
Well, it's running at around about 2,075 at the moment. It's had a very nice push up over the last, week and a bit. And you're only the best part of probably $70 off your all-time high that was achieved a couple of weeks back at 2,144. So if you have conflict, you've got to be also conscious as far as what happens to US dollar. if there's conflict and this escalates with the issues in the Red Sea, then I wouldn't be surprised to see some sort of war premium and boost to the upside for gold. So yes, it could have some really nice leg up from here. We'll just have to see how it all plays.
Okay, we'll have to see how it all flies. But Peter, thank you so much for joining in with us this afternoon on ETNow. It's always a pleasure having you on the show, and festive greetings to you as well, and hope you have a great new year as well. Thank you so much, Peter, for joining in with us.